What is up, my friends? Welcome back to the Jameson Brandon channel, where we talk about all things money. Today, I've got some data points for you. Unfortunately, not the greatest news going on. There is a lot to be paying attention to right now, unfortunately, because it's stretching a lot of people's bandwidths, right? And a lot of people are already stressed out with a lot of other things. Well, we're going to have to, unfortunately, add to that plate today. So, inflation has been a common topic in our Empire Alert newsletters and in these videos, and I'm sure you've been hearing about it, right? It's nothing new to you. CPI and inflation data just came back okay a couple days back, but the trend to look at here is that for a rolling 4-month period, we just had the biggest increase from headline to actually beating that, meaning it went up higher than the headlines were suggesting for inflation for the first time, or CPI, for the first time ever since Bloomberg started tracking it. As Jim Reed, credit strategist or data strategist from Deutsche Bank, stated that the post-pandemic recovery continues to throw inflation models out the window for the time being. So essentially, we got to go back to the drawing board and make a new model. We've reported on the 10 companies that were expecting to have rate hikes going into, that's hitting now, August, September, October, etc. Tyson Foods, on their earnings call, recently said that they actually can't, rate hike fast enough with the rising costs of their products. So you can expect inflation to continue to go up. So what is this creating? Well, it's creating this environment where people are going absolutely insane trying to find yield. So banks are doing it. They're trying to find yield. They're using things like the repo markets and whatever kind of other backdoor options that they've got, right? Besides market investment, market manipulation that they are involved in, right? But for the little guy, for the average Joe, he's pretty much got US equities, stocks, right? Stocks, bonds, crypto, treasuries, right? So we've got a JP Morgan quant who has given us some interesting data models talking about retail flow into US equities. The first chart is from their colleagues in global quantitative and derivatives research. The estimated retail investor net flow into US equities and ETFs from this model has been hovering very high at the 700 million per day pace in the recent weeks, including the week ending July 30th. As a result, the monthly net flow for the month of July rose to a new record high of 15 billion, surpassing the previous record high of 10 billion in June by 50%. So what we see is time is going on and retail's hunting for yields, retail's hunting for some way to beat the real inflation that, remember, Jerome Powell said was transitory, which is now a meme. That very real inflation that they're trying to beat, they're going and turning to the stock market for that. All right, and lastly, what I want to talk about is probably the one thing that most people are just completely throwing out the window and ignoring, which is mean reversion. I've been talking about it over and over and over again in the Empire Alerts and in the community, which is that, what goes up must come down, gravity, equal measures, right? Sir Isaac Newton. There's all kinds of sayings around this because it's true. So when we have a huge amount of surplus, there has to be some sort of mean reversion. This is just how markets work. Now, the thing that most people get stuck on is, when is that going to happen? And can I make money in the meantime and pull it all out? And everyone thinks that that's going to happen for them. But from what I've seen and with personal experience is that, especially if this is your first cycle, you will not cash out in time. I just know it. 80-90% of people will not cash out in time. That sucks. I have no clue why we did that, but everyone just about does that. They hold on way too long. We've already seen that with the crash in crypto, which took down with it literally the entire landscape and market of cryptocurrencies. So everything from meme coins to, majors like Bitcoin and ETH, just look around. Most of those people are still holding those. We've seen this already happen with the GameStop run up that Wall Street Bets tried to do. Most of those people held onto that way too long. They were thinking that it's going to be some revolutionary, 5-10 year thing, and they held too long. A lot of people lost there. A lot of people lost with Doge. A lot of people lost with these meme coins like Elon Coin and Shibu and all these memes. If that happened then, and we saw the same thing happen in 2017 with crypto, we saw the same thing happen in 2013 in crypto, we saw the same thing happen in 2008 in the financial markets and the legacy markets. Why is this time different? So everyone's just going to magically sell on time and get out of this unscathed? Anyways, one thing I want to leave you with here is what's called the CAPE 10, a cyclical measure of price to earnings. And so based on 120 years of data, a reversion to the average and trend line results in 56 and 36% price declines, respectively. An excess reversion to the 2008 levels would result in a 66% decline. A severe excess excess reversion to prior lows results in an 85% crash. Right now, I just shared the other day, the Buffett indicator, which is corporate earnings to GDP, is at an all-time high right now. The thing I'll say with cycles that I've learned is I very much like the book called Market Cycles. You might want to pick that up if you haven't read that or listened to it yet on Audible. It's very hard to tell where we're going, but it is much easier to tell where we are right now. And there's telltale signs of where we're at and what's happening. NFTs going for, tens of millions, hundreds of millions of dollars right now in the middle of millions of people being unemployed and everything else going on. You have to start asking those harder, deeper questions, right? Like I said, the best thing you can try and do right now is figure out where are we at in the cycle and make your plan accordingly. So anyways, that's all I got for you. Comment below if you got something to say. If you like this sort of thing, share it, please. Let's build this community up. Subscribe, hit the bell notification. You'll get more notifications when we do upload, which is great. And be on the lookout, more videos coming soon.